I always consider myself a smart investor. I have some examples to prove that. First, I compiled the first fashion dictionary in China in 1998, which brought me 120,000 Chinese dollar. Please watch my old video on my YouTube channel. Second, I spent $58,000 to buy a foreclosure house in 2009. During that year, American house price has dropped into bottom. Now the price of this single-family house has increased 4 times as the original price. Thirdly, after living in the United States, I kept paying Social Security money, Chinese call tu money, to my university's authority for years. That investment made me able to get decent retired money from China each month now. But investing in Tesla stock alone is my wrong decision. The American stock market has long regarded as one of the most robust and dynamic financial systems in the world. While stock markets across Europe and other regions have their strengths, several key factors contribute to the feeling that the American stock market stands out as superior. While European and other international markets have their advantages, the American stock market continues to hold a distinct edge in terms of size, liquidity, innovation, regulatory structure, historical performance, and global influence. These factors make it a compelling choice for investors worldwide seeking growth, stability, and diverse opportunities. As the landscape of global finance evolves, the U.S. stock market is likely to still be at the forefront, attracting both domestic and international investors while setting the stage for future advancements in business and trade. High-tech and AI now play the most key role in America's stock market. The 7 magnificent companies stocks, Apple, Nvidia, Microsoft, Google, Amazon, Meta, Tesla are the leaders of high-tech and AI investment field. During the past 2 years, I put my spare money into the ETF QQQ and then transferred to stock Apple and Meta, Facebook. For 2 years, these stocks totally increased my investment value from about $75,000 to $110,000. My stock's value has almost increased 46%. Investing in American stock market can be an exhilarating journey filled with difficulties, but the profit is very visible and directly. One day in November 2023, I was walking in a shopping center near home, and I found a Tesla car in the parking lot. I looked at it with curiosity. Suddenly, the owner got out from his car, and then we talked with each other about his car. He told me he had bought it for years, and it kept in good condition. He added that he not only likes his Tesla car, but also likes Tesla stocks. He bought Tesla stock exceedingly early and never sells them. The stock has split 2 times already, and he really made his first bucket of gold from this stock. Influenced by him, I did research about this company and CEO Elon Musk. And then I sold my QQQ, Apple and Meta stocks, and put all the money, $120,000, into the Tesla stock only. I bought 570 Tesla shares at $210 averagely. Among the 7 magnificent stocks, Tesla stock is the monkey king with such kind of character, up and down dramatically in American stock market. Since I bought 570 shares last November, I am in roller coaster ride every day. The Tesla stock, TSLA, has captivated investors and market watchers alike with its dramatic price fluctuations, reminiscent of the legendary character known as the Monkey King, an embodiment of volatility, excitement, and unpredictability. As a company at the forefront of electric vehicle (EV) innovation, Tesla's stock performance has resembled a roller coaster ride, full of difficulties that keep investors on the edge of their seats. Here is an exploration of why Tesla stock has become symbolic of such a thrilling experience in the American stock market. For instance, Tesla's meteoric rise in 2020 saw the stock increase over 700%, driven by factors such as record vehicle deliveries, growing demand for renewable energy solutions, and expanding global markets. However, just as suddenly as it climbed, the stock has faced substantial corrections due to market sentiment shifts, supply chain challenges, or broader economic factors, leaving onlookers in awe of the erratic ride. This belief in Tesla's future success, akin to following a heroic tale of transformation and triumph, fuels investor enthusiasm, even amid the inevitable dips. Yet, akin to the Monkey King facing adversities, Tesla stock performance often reminds investors that the journey can be both exhilarating and tumultuous. Tesla stock embodies the traits of the Monkey King, full of unpredictable highs and lows that create a thrilling and sometimes nerve-wracking experience in the American stock market. For investors who embrace the excitement of this dynamic ride, Tesla is more than just a stock. It symbolizes innovation, ambition, and the unpredictable nature of modern investing. However, like any roller coaster, it is essential to secure oneself with sound financial practices, balanced expectations, and an understanding of the journey ahead. In the end, the ride might be steep, but the potential rewards could be equally thrilling. Elon Musk, the CEO of Tesla and SpaceX, is recognized as one of the most influential innovators of our time. The pioneer of high-tech innovation, his ventures span multiple industries, from electric vehicles to space exploration, and his vision for the future is both ambitious and transformative. Musk's major projects: Starlink, SpaceX, full self-driving, FSD, technology, robotic taxis, Robot Optimus, Tesla Bot, which illustrate his role as a pioneer in high technology. Like Steve Jobs, Musk has a unique ability to inspire and rally people around his vision. He has a knack for articulating bold ideas that capture the public's imagination, such as colonizing Mars, revolutionizing transportation with electric vehicles, and creating a sustainable energy future. His ambitious goals resonate with many investors and consumers, driving enthusiasm for his companies. However, while Jobs was known for his focus on product perfection and a more measured approach to product launches, Musk's style is characterized by a more aggressive timeline and a willingness to push the boundaries of what is possible. This can lead to significant excitement, but it can also result in delays and unmet expectations. Musk's ambitious timelines and the later delays in delivering promised products or features can lead to significant fluctuations in Tesla's stock price. For instance, last October 10th, he did not give his investors when the robotic taxis were marketable. And when can the FSD technology turn into all the business of Tesla vehicles? So, Tesla stock, TSLA, dropped sharply again. I am a value investor, not short-term stock investor, even though I still felt a lot of pressure. Last April, Tesla's stock price sharply dropped to about $150 per share, and my 570 Tesla value 120,000 shares has totally shrunken to only $75,000. I was scared, so I sold 50 shares at $148 per share to pay off the lever money to Interactive Brokers. Because of good news from FSD, for robotaxi service Tesla stock price up to $164, I sold 20 shares and keep 500 shares now. Today, Tesla stock price sharply dropped again to $209. From last November to this October, I have kept 570 for 1 year, but the money I have put into the Tesla stock is the same, and the price of the Tesla is also the same. I did not earn any large money from this stock. At the same time, QQQ's price has increased about 40% and Meta about 35%. I do not know if I should continue to keep them, or if I should sell them partly to buy QQQ or Meta. During the last 5 years, Tesla still lists the number 2 about profit in 7 magnificent stocks. Do you think I should keep all the money into the Tesla stock? Investing in individual stocks, including Tesla, involves a certain level of risk and should be approached with careful consideration. Here are some factors for me to keep in mind when deciding whether to keep your investment in Tesla stock. 1. Risk tolerance. Volatility. Tesla stock has a history of significant price fluctuations. If you are uncomfortable with the potential for sharp declines, you might want to consider diversifying your investments. Long-term versus short-term. Consider whether you are investing in the long term or seeking short-term gains. Long-term investors may be more willing to weather volatility. 2. Diversification. Portfolio balance. It is advisable to diversify your investments across different sectors and asset classes to reduce risk. If a massive portion of your money is tied up in Tesla, evaluate whether this concentration aligns with your investment strategy. 3. Financial goals. Aligning with goals. Consider your financial goals and whether keeping all your money in Tesla aligns with them. If you have specific targets for retirement, a home purchase, or other financial needs, reassess how Tesla fits into that plan. 4. Market trends and analysis. Research. Stay informed about Tesla's performance, industry trends, and market conditions. Understanding the company's fundamentals, competitive landscape, and future growth prospects can help inform your decision. Analyst opinions. Look at what analysts say about Tesla. While their opinions are not foolproof, they can provide insights into market sentiment. 5. Company outlook. Innovation and growth. Consider Tesla's innovative products and market position. If you believe in the company's long-term potential and innovative capabilities, you may be more inclined to hold onto your shares. If Tesla dropped deep, I would sell some Tesla shares to buy ETF QQQ or NVIDIA.